Welcome to the DWS Market Update. Thank you for joining us again in the new year. There are many interesting topics to discuss. The new year starts like the previous year ended, with the global interest rate environment influencing expectations of market participants. Last year, the outlook for global key interest rates took a wild ride. Everything was on the table, from the anticipated 7 rate cuts by the US Central Bank Fed to speculations about further increases. Currently, expectations in the US have settled at around 2 more rate cuts for 2025, which aligns with DWS's internal view. In the Eurozone, the European Central Bank ECB is expected to cut the deposit rate 4 more times, dipping their toes into expansionary territory in 2026. This reflects the divergent inflation expectations as well as the divergent economic dynamics. Events of the past year have also left their mark on the longer end of the yield curve. For over 2 years, yield curves in the US as well as in Germany have been inverted. Now, just after the Fed's first rate cut, this relationship has reversed, with 10-year US Treasury yields now firmly above 2-year US Treasury yields. A similar situation applies to the German government bond curve, which also ended its inversion when the Fed started cutting. This means that a certain term premium is now visible again in both markets, although it is still significantly below historical averages. Looking at the DWS forecasts shows that yields in the 10-year range roughly correspond to our expectations for the end of 2025. However, there might still be potential for falling yields at the short end, suggesting a further steepening of the curves. It will be interesting to see which consequences this development will have for the stock market valuation and sentiment. We will keep you up to date. That's it for today. Thank you for your attention and goodbye until next time.